I know the wait lasted longer than most New Year's resolutions, but we are finally here with the first Southern California housing market report with 2023 housing data. We're going to dive into the single family and multifamily numbers for Southern California so that you know how 2023 is starting out. And the big question is, who's being more stubborn? Is it home sellers or home buyers? And the data has an answer for us. We're going to give you a quick update on what we're seeing out there. We've been busy since the first of the year, touring buyers and talking to sellers. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping Southern California buyers and sellers make the best data-driven decisions in this crazy housing market. So if you're ready to dive into the single family and multifamily numbers for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button. And let's get started. Diving into the Orange County numbers first, here we have the sold. We're also going to cover the number of properties under contract, and we're going to cover the number of new listings. This is for the 2 weeks, 1st through the 15th in January, is going all the way back to 2018. And those with an eagle eye may now notice that we have 6 years of data versus 5. And why is that? If I would have dropped 2018, we would have only had one normal year, and that's 2019. And I didn't think that was fair. I wanted to keep 2018 to have at least 2 normal years because we know 2020, 2021, and 2022 were not normal years. 2023 is definitely not looking normal, and we're going to show why. So you don't need to raise your hand. Just shout out the answer. Why are sales so low in 2023 for the first 2 weeks? That's right. It's because we've had pending sales so low. And of course, that has translated into a lower number of sales. You'll see that in general across Southern California. Because demand has been down, we are seeing fewer closed sales. So sold properties are old news, but let's look at the new news. We need to look at the number of properties that are going under contract. So that's buyer demand. And we need to look at the number of new listings. That's seller supply, and see how those compare. And it's crazy. We have crazy record low numbers. How record low? Well, the listings in Orange County are half of where they normally would be in a normal year. You can see that. And pending sales are down as well. They're down not quite to half, but they're about at 80% of levels of where they were during normal years of 2018 and 2019. And we're going to see this except for one county, there's a difference. And it's the usual one who has a difference. If you've been watching these, you can probably already guess which county it is that's different. The Altos research reports, we're going to run through those quickly to see where inventory levels are at the county level. But what we can see is that new inventory is not coming. Where are all the sellers? Well, we talked about it in the past. Some of them are rate locked. They have crazy low rates. Why would they sell right now? Others are waiting to see what happens with the market. We have record low new listings at the same time we have record low demand. In fact, they're closer together than they have been in years past between the level of new listings and the level of properties going under contract. So it feels like a seller's market, even though there aren't as many buyers out there shopping and there aren't as many sellers out there selling. This would feel like a seller's market. Now Los Angeles, the land of eviction moratoria, still in place. LA City, LA County, but may be ending at the end of the month. We'll have an update for you on that. So number of properties in escrow at a record low. New listings also at a crazy record low. We may see more inventory come to the market if and when the eviction moratoria end. So we're going to track that carefully. And that would be for single family and multifamily, because there's landlords who are fed up with being a landlord and fed up with being in Los Angeles and not having control over their property. And then there will be landlords who have to sell because they haven't received rent, haven't been able to make payments. So we're going to be watching to see if there's an uptick in the listing inventory if those eviction moratoria end. The other thing, make sure you watch our foreclosure market update, and we have a link so you can check that out. We are seeing more foreclosures in Los Angeles than we would expect as compared to other counties. And Riverside, new listings off about 1,000 from where they'd be in more normal years. And we can see the demand is down, but off about 200. So those numbers of new listings and pending sales are close. So we're seeing that sellers are being more stubborn maybe in coming to the market, but buyers are still out there shopping. So we've seen that sellers have given up on listing, but they seem to be doing it in greater numbers than buyers are giving up on buying. San Bernardino, and I was just here showing property in San Bernardino, And you can see that we are at the 50% levels or less. You compare inventory to 2018 and 2023, the new listings, and demand is down, but not as rapidly and not as big as the number of new listings has gone down. So the sellers are being more stubborn than the buyers are. Ventura, here's our one exception. So inventory is down just like we see in other parts of Southern California, but demand has dropped significantly. So we're at half of where we would be in normal years, whereas in other counties, we're at maybe 75 or 80%. So Ventura, if you guessed, is always our outlier. They're always up to something different, but it's important we keep tracking to see what's going on in Ventura. And finally, San Diego. San Diego was one of the last markets to be a seller's market. They had 100% seller's market on the market action index from Altos. We can see inventory down, half of where it would be, demand down, but it's still at about 75% or 80% of where it would normally be. So another market with sellers being stubborn and buyers being stubborn, but not quite as stubborn. Hey, don't forget that we're real estate agents based in Southern California, and we can help you out no matter where you are in SoCal and even beyond. We have a link below that you can reach out whether you're thinking of buying or selling for no obligation, no BS consultation. Multifamily market data, everything with 2 units or bigger. Let's run through these numbers. And there's some headwinds for multifamily real estate, and that is the fact that rates have gone up. It is more expensive if an investor is going to finance a property, so they need to factor that in, and rents have gone up, but they've actually started to turn. We're going to be addressing that in an upcoming update on rental rates. Southern California multifamily data, it's a completely mixed bag depending on where you are. And let me give you a quick refresher on what happened. So during COVID, multifamily took a hit before single family did. So things slowed down for multifamily sales very quickly during COVID, and they stayed down. It took a while. Then as things started to slow down in single family because of the increase in interest rates, we didn't see it yet translate into the multifamily data. So it was almost like an echo where it took a little bit to get there for the end and the beginning. But now we've got a completely mixed bag depending on where you are. So Orange County, number of new listings is pretty consistent. Compared to 2018, it's not far off. 2019, there were more. But 30 is a pretty normal number. Let's give it that. And then we can see the demand is way down. The only bigger gap is 2020 between new listings and number of properties going under contract. So Orange County multifamily, we may start to see a tick up in inventory. And really, it is all because of the price. Investors have to make a deal pencil, so they're much more sensitive to numbers. So if everything's overpriced, eventually they get to the point where they just don't put them under contract anymore. Los Angeles, another mixed bag. We have inventory down, and that could be partially attributed to the eviction moratorium, and then demand is way down. So this is a market where we're starting to see that inventory is going to start to collect in Los Angeles for multifamily. Now that may change after the eviction moratoria are over, but some of the regulations that they're talking about putting in place in LA County will make it difficult for landlords to be profitable landlords and have control over their properties. So we may see inventory go up as landlords continue to try to get out, and demand stay down as landlords don't want to buy into that type of marketplace. Riverside, look at the huge number of new listings we had last year and the huge drop. So in 1 year, just an absolute pendulum swing from 32 properties in the first 2 weeks, and this year only 7. Demand has stayed relatively steady in Riverside. Hasn't gone through the roof, hasn't plummeted, but you can see here that there's not enough new inventory. So this is definitely a seller's market. We actually have that twist. So you can see mixed bag in every county. San Bernardino, we can see that listings have absolutely plummeted. You compare them to 2018, 2019, listing levels have stayed down. Demand has dropped as well. So just a mixed bag when we look at multifamily. Ventura, always all over the place. Nothing closed these 2 past weeks. 1 went under contract, 2 new listings, and you can see demand and supply have been everywhere in Ventura. San Diego, we've got a drop in new listings and we have an increase in the number of properties going under contract. So complete opposite from what we saw in Los Angeles, for example, as far as demand. This is becoming a very tight supply market if demand continues at this rate. Here's a quick look at the advanced analytics from Altos Research. So you can see at a national level that inventory is starting out the year at the highest we've had since 2021, but significantly below normal markets. If you go back, you can see, in fact, here we are years ago, almost 1 million properties for sale at this time. And right now in the United States, we have less than half of that. Then we look at the state of California, and it's a similar tale where inventory is at a high compared to 2021 and 2022 at this time. Not a huge high, but definitely lower than normal years in the past. The important thing to note is that can change. Just as we saw in California, we saw the huge run up in inventory. Things were starting to look like the market could shift dramatically as interest rates went up. So that's what we need to keep an eye on to see what happens as we get into the busy spring selling buying season. Let's take a look at the county data from Altos Research Reports. You've subscribed for these, right? If you haven't, you're completely missing out. You can literally search for any city or zip code. If you want the county data, I can add it to your account, but you got to sign up first, so do that. Orange County, we can see the market action index will be similar in all counties but one, still a slight seller's advantage. But let's take a look at inventory. Orange County is one we're starting to see a slight tick up in inventory. 1,713 properties available for sale in all of Orange County, but you take a look at 2020 and there were 3,000 at this time of year. So big difference starting out the year in 2020. Obviously things were lower in 2022. 2021 is actually pretty close to the level of inventory where it is now. That stayed low. It didn't go up, and it continued to drop all throughout 2021. Again, here's that run up in inventory we had. You will see this in all the counties. That was thanks to the lovely interest rate increase that we had in 2022. Los Angeles, same thing, slight seller's advantage in the market. Don't forget there's a bunch of other data in here as well that you could be taking a look at if you're subscribed to these reports. And inventory is starting to go up slightly in Los Angeles after that big drop we had. And we are somewhat close to the levels of 2021, but definitely below 2020. Look at that, over 7,000 homes available at this time of year. And right now we're under 6,000. So 2,000 home difference for available inventory starting out the year. Slight seller's advantage in Riverside, so that's not the one that's different. We're getting there, and we can see inventory's at 4751 right now. It was definitely lower in the start of the year 2021 and 2022, but well below 2020. San Bernardino, it's not you. Slight seller's advantage. Inventory definitely up above where it was in 2020 and 2021, but nowhere near where it was in 2020. Noticing a trend. Ventura, definitely not you with the market action index. Inventory, definitely low. Look at that. At this time of year, 1,300 homes versus 757. So not much inventory out there for the start of the year in Ventura. And you guessed it, San Diego is actually a strong seller's market. In fact, it got stronger for this week as compared to last month. That's what you'd expect. We didn't see that as much in the other counties, but still a strong seller's market in San Diego. Continues to rally. We saw that big run up in inventory there was getting scary, and then it dropped. And we are way down. So 1,892 versus a 2020, there were 2,700. So that is the data according to Altos Research Reports. Other cool thing is when you sign up for these, you're also going to get my free weekly email newsletter as well. So far, we're seeing a relatively solid start to the 2023 market with a buyer in San Clemente, one well-priced ocean view home that we visited during an open house, had about 25 to 30 people walking through, and it ended up receiving multiple offers. So in any market, a well-priced home will end up with multiple offers. Additionally, properties we were showing out in San Bernardino went under contract. In fact, one was on the market for over 30 days and ended up getting a full price offer after all that time. As far as sellers we're talking to, there's a lot of wait and see out there, but we're starting to talk to more who are ready to list and sell, particularly in Los Angeles. We've talked to quite a few sellers we're helping there who have tenant occupied properties and they no longer want to be a landlord. landlord? Let me know in the comments below what you're seeing out there. I want to get your perspective on the start of the housing market 2023. What else would you like to see in the data? Let us know in the comments below. Make sure you're subscribed to the Altos Research Report so you get that data every week, and you get the bonus of our free weekly email newsletter as well, where we cover market updates plus everything you need to know as a buyer or seller or landlord or tenant. If you like this video, you are not going to want to miss this next one right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.